Is it time to just give up on premium bonds? NS&I are going to be dropping their prize fund rate from 4.65%, and that's going to drop down in the March 24 prize draw to 4.4%. Is it really that bad? We'll talk through what my thoughts are on what's changing with premium bonds and what I might potentially do with some of my money, whether I move it from here to something that could most definitely pay you a higher rate of interest over the year. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking FI. What has been going on with premium bonds? Well, in my personal case, part of my emergency fund is sat in premium bonds at the moment, and for the £3,500 that I have sat there, I've won £25 in the last 12 months. So my rate of return is particularly well below that 4.4% that it's going to flick over to in prize fund value in March. While that drop sounds a little bit early and a little bit drastic, they've done it because everybody is predicting that in the near future, probably early summer through towards the end of the year, we will start to see the Bank of England reducing its interest rates, and NS&I have decided to start to reduce the prize fund. If we have a quick look at this, you'll see that your odds of winning will not change. You will still end up with a 20,000 to 1 chance for every £1 of bond that you have in the monthly prize draw. And remember, if you were to have put money in December, you would have missed the January prize fund, but you would have been eligible for the February prize fund. And guess what? I failed to win yet again. The good thing is any prizes that you do win are going to be tax free, and the minimum you can pay in is £25 up to that maximum of £50,000. The last time we had a change in the rate was back in September. I hear you say, what is the major change that has taken place here? If you look down at the bottom, it's going to be the prize fund number of prizes as well as the prize fund value. Looking at about 30 million less being paid out, and that equates to about 170, 180,000 less prizes. And whereabouts are they deciding to remove these? So we've still got the two people will be really lucky and they will manage to walk away with their £1 million. What they will do is they will reduce lots of those larger, more significant prizes. So you'll have less at the 100,000, 50,000, 25,000 and 10,000 prizes. And that continues the whole way down until you get to the £25 prize, and there will be a flip where you will see almost 400,000 more smaller prizes. I hold an emergency fund within premium bonds, and I am seriously considering pulling it and putting it somewhere else. And where am I considering putting that? Because I've already I was on a really good deal with First Direct last year, and I've managed to build that up and max that out at the £300 per month. I walked away with about £180 on the side of that. What I have done is they have slashed their 7% down to 2% in their regular savers account. So I have decided that I'm moving a lot of that into Trading 212. And I'm going to explain why I am looking at moving across to there. And remember, Trading 212 is a commission-free platform, but it does pay you interest on money that you have not committed within your account. So let's go and have a look at the Trading 212 app. So when you come into your Trading 212 account, what you do see is you see how much you've got in your portfolio, but you've also got the drop down at the top allows you to go in and have a look to see what you have in reserve for orders and free funds. So within this, I have just over 2,600, and that is basically, I have moved quite a lot of the money that I had sat within the First Direct regular saver account where I was getting up to, and I'm going to show you why I have done that, because by pressing a couple of buttons you can get yourself a 5% APY within this account. Head back over to your home screen, press the three lines on the bottom right hand corner and then have a look at earn interest on cash. You click on there and you can basically see how much money you are making on the last month in earnings, how much you made in all time, and then currently how much cash you have in there. And the most important bit is what is your APY, your GB rate. Currently this is switched on to 2.15. That is the old rate. If you haven't gone and actually changed this on your app or your account, you'll continue to be getting paid this. And basically that is what the APY is, the annual percentage yield. And what you get is you will get a daily amount of interest coming in. So remember what that says, I'm going to be getting 15.6 pence per day if I remained on that. But if we go and unlock higher interest rate up in the top left, learn more, and it's going to explain how you earn daily interest on the free cash that you have within your account. The rate that I'm going to be eligible for when I go through this and enable will be 5% APY. But some people have said this is 5% a day. I would love that to be the case because we'd all be millionaires pretty quickly if we were getting an interest rate that high. This is APY, so this is an annual percentage yield, and it may fluctuate a little bit. How can Trading 212 manage to do this? They do that by holding cash in qualifying money market funds. There is lots of detail in here. There are frequently asked questions, there are disclosure notices on there, and also go onto the website, they have terms and conditions as well. And by the way, if you don't already have a Trading 212 account, why don't you use my link down below and you can get a free share for signing up of up to £100. Just have a quick look at the terms and conditions for that. So what is a money market fund? So money market fund in basic terms is just money that is held in low risk accounts, things like short-term investment, short-term bonds. Your money is always at risk if it has been invested, but what they are attempting to do is reduce that, as they say, by having higher quality QMMFs in their portfolios. You should be able to withdraw. So if you have free funds in there that have been committed to a money market fund, the only time that you wouldn't be able to do that is if there was a huge run on withdrawals from the money market fund because of some type of market issue. There is always the risk that money that is invested in through this side of things is not covered by the FSCS side of things because the money has actually been invested and isn't held in cash in a bank. Once you've read through all of this, had a look at those FAQs, and there are lots of them down here. You just press on there and you can have a look and go through what is a qualified money market, how does that interest all work. Go away, do some due diligence on that. I've read these and understood, so I have now enabled that interest, and that has jumped from remember the 2.15% up to 5% APY, and daily interest I'm going to be going from that 15.6 pence up to almost 36 pence per day. So I could look at buying into a stock or two every single month based on that interest that I am going to be picking up on a daily rate. At the beginning of the video I was talking about, is it time to just pull all of my money out of the premium bonds and chuck it into Trading 212? It's something I'm still going to do a little bit of thinking about, because in reality it is my emergency fund. Problem is, if it's in my Trading 212 account, I might decide to invest it into something. And the whole idea behind the emergency fund is having it somewhere segregated so that you don't get your hands on it and you don't whittle it away. It is there for an emergency, just in case the worst happens, you lose your job and you end up having to pay for your bills. you want to have that somewhere where it is nice and safe, and it's about as safe as it can be in the premium bonds. I would love to hear what you think about the premium bond side of things. Is the fact it's going to drop by 25 basis points, is that going to put you off? Why don't you go and have a look at this video that I have done on premium bonds that talks through what they actually are. Thanks very much for watching, and I will see you in the next one. Cheers, bye.